Hello everyone. In this video, let us learn about incidence of tax. So what do you mean by incidence of tax? So any idea what is incidence of tax? Under Section 5 of income tax, it provides a scope for total income in terms of your residential status of an assessee, because the incidence of a tax of a person depends upon his residential status. All of you know there is 3 residential status of an individual. So it might be resident, ordinary resident, resident, not ordinary resident, and non-resident. Depending upon the residential status, the incidence of tax of an assessee will be assessed. So this particular incidence of tax, all of you know that this depends entirely upon the residential status of an individual, and the scope of total income of an assessee depends upon the following 3 points, which has to be considered when we check on incidence of tax. First one, the residential status of an assessee, whether he is ordinary resident, not ordinary resident, or non-resident, has to be first checked, and based upon that, the incidence of tax of an assessee will be calculated. The place of accrual of your receipts of income, whether actual or deemed to be received, has to be analyzed. So where the income has been generated, whether it is within India or outside India, has to be known. The point of the time at which the income had occurred to and for was received by or on behalf of an assessee. So at what time? So when was this particular income was generated, and when was it received by an individual assessee also to be known, whether it is previous year income or not, to be assessed first. So these are the points which you have to remember when we check on incidence of tax for different residential status. So what is this Indian income and foreign income and income deemed to be received in India under Section 7? So Indian income, any income which falls under this 3 category are termed as Indian income. If income is received or deemed to be received in India during the previous year, at the same time it occurs or deemed to occur in India during the previous year. For example, you're working in India and you receive a salary in India. It is an income which is received in India. Or it can be an income which is generated outside, but if you receive it in India, that is termed as Indian income. If any income is received or deemed to be received in India during the previous year, but it occurs outside India during the previous year, so that also is termed as Indian income. For example, you have earned certain income in US, and if you receive that particular income, what you have earned in US in India, then it is termed as Indian income for tax purpose. If income is received outside India during the previous year, but it occurs or arise or deemed to occur or arise in India during the previous year, so that also is termed as your tax purpose. It is termed as your Indian income. So all the 3 incomes are termed as Indian income. So next thing is foreign income. What is a foreign income? So the following conditions should be satisfied, then such incomes are termed as foreign income. Income not received or deemed to be received in India. So if you are not receiving any income, or if you don't deem to receive any income outside India, if you are receiving any income, then that is known as foreign income. Income does not occur or arise or does not deem to occur or arise in India. It's not generated in India. That income itself is not generated in India. That is termed as foreign income. Receipts of income versus remittance of income. So what is this receipt of income? Receipt of income refers to the first occasion when the recipient gets the money under his control. So receipt of income refers to the first occasion when the recipient, the person who is receiving, is termed as recipient, gets the money under his control, is termed as receipt of income. Once an amount is received as income, any transmission of such amount to another place does not result in receipt to other place. So once you receive that, the other transaction, what do you do with that money does not include any kind of receipt at other place. So income deemed to receive in India. So the following income shall be deemed to be received in India in previous year in absence of actual receipts. So first one, contribution made by employer to the recognized provident fund in excess of 12% of salary of employee. So any amount which is contributed by your employer to your RPF account, that is your recognized provident fund account, and if it exceeds 12% of your salary of an employee, then that will be termed as your taxable amount, which will be taken into consideration. So interest credited to RPF of an employee which exceeds more than 9.5% per annum will be taxable. Transfer balance from the unrecognized fund or recognized provident fund has been discussed in the chapter of income from salary. So in income from salary, we learn the details about all these particular things of RPF and your various types of provident fund, what we have. So it might be statutory provident fund, unrecognized provident fund, or it can be even public provident fund. How are we supposed to deal with those things will be explained in detail in income from salary. The contribution made by the central government or any other employee in the previous year to the account of an employee under notified contribution of pension scheme referred under section 80 CCD. So that also is termed as income deemed to be received in India. Next, so let us take certain examples and check whether that is taxable in the following residential status. So residential status can be classified into three groups: resident and ordinary resident, resident but not ordinary resident, and non-resident. So income received or deemed to be received in India during the previous year will be taxable irrespective of your residential status in India. Whether you're ordinary resident, not ordinary resident, or non-resident, if your income is generated in India and if it is received in India, then in both the cases, it is taxable for all three residential status. Income occurring or arising or deemed to occur or arise during the previous year in India will be taxable for all three cases. So I've told any income which is generated in India, not only received, if that income is generated in India, that will be taxable for all three cases. Next one, income arising or occurring outside India during the previous year. So if any income is arised, if it is generated outside India or in the previous year, then what has to be done? It will be taxable in case of resident and ordinary resident. And in case of not ordinary resident, it will be taxable, but only if such income is derived from a business controlled in or profession set up in India. Otherwise, it will not be taxable. In case of non-resident, yes, it is not taxable in case of non-resident. So any income, that is your foreign income, which is arised outside India, it is taxable for resident, ordinary resident, and not ordinary resident, it is taxable only if such income is derived from business, which is controlled, business or profession, which is controlled from India. In case of non-resident, it will not be taxable. So next one is your Indian income. So any kind of Indian income, it is taxable for all three cases. Foreign income, taxable for resident, ordinary resident. In case of resident, not ordinary resident, only two types of foreign income are taxable. That is, other foreign incomes are not taxable. So in case of non-resident, it will not be taxable. So following foreign income are taxable in the hands of resident, not ordinary resident. That is, business income which is controlled wholly or partly from India, income from professions set up in India. Above two income must be included as per IT rules of resident, not ordinary resident, even if they occur or arise outside India. So this has to be included as a taxable part for not ordinary resident, if even though this particular income occurs outside India or arises outside India. But if the business setup, what is set outside India, is controlled from India, or any kind of profession which is set up outside India, and that will be taxable in the hands of resident, not ordinary resident. But in case of non-resident, that will not be taxable. I think you're clear on incidence of tax based upon residential status of an individual. Thank you.